For commodities, it seems that all that glitters is gold. Amid recent turmoil in the financial system and concerns over the health of the global economy, gold has remained stable. Here's why the precious metal is continuing to shine. Investors piled into gold in March. The price is currently hovering at just under $2,000 an ounce, and it has risen 8.4% this year. The recent rise comes after the collapse of Silicon Valley Bank and Signature Bank in the US and the takeover of Swiss bank Credit Suisse by its rival UBS. A late March sell-off in Germany's Deutsche Bank has also ramped up concerns about the financial system, but yet gold has sparkled through the chaos. Investors value gold for its stability during uncertain times, and often look to the precious metal as an alternative to the traditional banking system. Here's one example of its recent appeal. In the week following the SVB collapse, net inflows into gold exchange traded funds stood at roughly 14 tons. That's over $1 billion worth. For a couple of months before the collapse, investors had been pulling money out of funds. In March, gold benefited from expectations that central banks would reduce the speed of interest rate hikes in order to cut pressure on the financial system. Over the last year, the Federal Reserve has raised interest rates in a bid to tame inflation. These hikes made gold less attractive for investors because, unlike other investments, the metal does not pay interest. In March, Fed Chair Jerome Powell announced yet another rate rise, but he hinted that it could be the last one for now, leading to a jump in gold prices.
We no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation.
Gold is also getting a boost from a decline in the dollar. A weaker dollar lifts the price of commodities that are backed by the US currency, one of which is gold. To compare, gold had a more lackluster year in 2022. It was briefly trading at about $2,000 an ounce following Russia's invasion of Ukraine. However, as the Fed began lifting its rates to curb inflation, the dollar soared to a 20-year high, which led to a slight climb down in gold prices. But the US dollar has since retreated from its 2022 peak, which has enabled gold prices to bounce back. Towards the end of March, gold prices rose towards its record level before dropping down slightly. That's as rescue measures for struggling banks helped ease contagion fears. However, analysts expect gold to remain resilient. It has been performing strongly, remaining above $1,500 an ounce for the last 3 years, according to the World Gold Council. Analysts at Fitch Solutions believe that mounting global financial instability is likely to keep on driving up gold prices, solidifying its reputation as a safe haven asset.